Bitcoin is crypto property. It is a long-term store of value, and it is the dominant crypto property. And the way it establishes itself as crypto property is through Nakamoto consensus and proof of work. You have a decentralized mining network that is encrypting energy with the SHA-256 hash function in order to create this wall of encrypted energy and make it resistant to denial of service attacks, other sorts of attacks. It needs to be robust and have integrity over time and space. And that's the technique that we've developed.
When Michael Saylor talks about Bitcoin, it's not just about price movements or market trends. It's about something bigger, a philosophical and legal foundation that makes Bitcoin fundamentally different from everything else in the crypto world. While Ethereum and other platforms evolve quickly, Saylor sees Bitcoin as a fortress, unchanging, incorruptible, and beyond the influence of any group. This distinction, he argues, is precisely why Bitcoin will continue to outpace Ethereum and every other crypto asset in the long run.
Yeah, most people don't understand securities law. Okay, Bitcoin's the only proven digital property that we have created in the world. We have created a property and not a security. The definition of property is a common commodity that is beyond the control of any one individual or corporation. If something is deemed property in a legal sense, it means it wouldn't be regulated as a security by the SEC. Gold is property. Soybeans are property. Wood, lumber, land is property. Bitcoin is property.
Here, Saylor draws a clear legal line between Bitcoin and Ethereum. Bitcoin is treated like gold, a neutral, incorruptible property, while Ethereum, by his reasoning, falls under the category of a security. This matters because securities face heavy regulation, disclosures, and oversight that limit their use and complicate their adoption at a governmental or institutional level. In his view, this difference will become more critical as regulators crack down on the crypto space.
Ethereum, everything else in the crypto ecosystem, likely they're all securities, right? Why are they securities? They're controlled by groups of developers. They're issued pursuant to ICOs, initial coin offerings. That makes them a security. If there's a pre-mine and there was a group of individuals that initially control the thing, it makes it security. If if anyone can exercise undue influence, it becomes a security. And technically, if you look at the definition, it's when you're making investment of money, relying upon the efforts of others and expectation of profit, it becomes an investment contract, a security. Okay.
This is where the comparison sharpens. According to Saylor, Ethereum's shifting policies, like the long-delayed difficulty bomb and its move to proof of stake, show that it's not beyond the influence of developers. This means Ethereum's future depends on decisions made by a select few, which opens it up to regulatory scrutiny. Bitcoin, by contrast, had its most pivotal governance battle during the block size war, and emerged unchanged, proving its resistance to manipulation.
Every few months it changes. There's a difficulty bomb in Ethereum that's been getting pushed back since 2016. They keep pushing it back. When it goes off, it will wipe out, obliterate a $50 billion Ethereum mining industry. Just wipe it out, completely change the protocol, flip everything to proof of stake. They keep putting it off. Okay, that sounds like a group of people exercising influence over the protocol.
Saylor uses the difficulty bomb as an example of just how much influence a handful of developers can exert over Ethereum. The fact that this transition, one that would completely reshape the network's economics, can be delayed and adjusted by a group of insiders underscores his point that Ethereum isn't truly decentralized property. For him, that undermines its long-term stability and trustworthiness as a base layer for global wealth storage.
In the block size war, all of the powerful holders and miners and exchanges wanted to change the protocol and double the block size. It would have changed all the economics of Bitcoin forever, for the next 1,000 years. It would have screwed up the economics of the miners. It would have shifted the balance of power in favor of some holders versus others. That war was lost. The original Bitcoin protocol continued on, and that means it's an unadulterated protocol, and it's shown itself to be resistant to the influence of any group of people. That's what makes it property.
Saylor emphasizes that Bitcoin's strength lies in its refusal to bend. Unlike Ethereum, which regularly updates its protocol, Bitcoin has stayed true to its original design. This immutability gives it a unique role. It's not just a cryptocurrency, it's the ethical and unshakable base layer for the entire digital economy. For Saylor, that's why it's not only different from Ethereum, it's superior.
Property is critical because if property makes Bitcoin, being property makes it the ethical foundation of the crypto economy. And by ethical foundation, I mean it's unethical for a public figure to endorse a security. If you're the mayor of a city, the governor of a state, if you're a politician, a congressman, a senator, a president of a nation, you can't endorse a security, nor can you make a security underpinning of the balance sheet of a public organization, right? It's like I couldn't say I really think that every citizen of Kansas City should buy Twitter stock because it's a better store of value. It's conflict of interest. It's probably illegal, right? Probably violates all sorts of Foreign Corrupt Practices Acts, as well as all the ethics laws. And so this is a very bright line, property versus security.
This ethical argument sets Bitcoin apart. For governments, corporations, and public officials, it's far safer to hold or endorse property than a security. That's why Bitcoin, in Saylor's eyes, isn't just another crypto asset, but the cornerstone of an emerging financial system.
As the SEC and the regulators move, there's going to be a massive shakeout. If they ever do clarify what the securities laws are, there's a whole set of disclosures and obligations, and then you're going to see, the entire industry rationalize in a big way.
And Saylor believes the regulatory future isn't far off. He predicts a massive shakeout in the crypto market, with thousands of tokens likely falling under strict securities laws. In such a landscape, Bitcoin's clear status as property gives it an unmatched advantage, ensuring its survival and continued growth while many other assets falter. In Saylor's worldview, Bitcoin isn't merely another digital asset competing for market share. It's the bedrock of a new financial order. Its unchanging nature gives it stability. Its legal clarity shields it from the regulatory storms he believes are coming, and its ethical standing allows governments, corporations, and even public figures to support it without crossing dangerous lines. To Saylor, this combination makes Bitcoin not just viable, but inevitable. Ethereum, on the other hand, may be a powerful platform for innovation, but he argues that its adaptability comes at a cost: centralization, regulatory vulnerability, and a lack of the permanence that makes Bitcoin so resilient. And when regulators finally draw clear lines around crypto, he believes that distinction will decide the winners and losers.
If you look at all the cryptos, there might be a dozen that you could debate are property, a debate. Of the ones that you could debate are property, there's one that's dominant, which is Bitcoin. There's 17,000 securities.
So what do you think? Is Saylor right? Will Bitcoin's unshakable foundation keep it ahead forever? Or could Ethereum's innovation eventually challenge its dominance? Share your thoughts in the comments.